Hello everyone, welcome to a new video for Bitcoin price prediction based on Elliott wave analysis. This is indicators analysis, and of course it's gonna be based on Elliott waves as well. We're gonna dive a little bit in what happened yesterday and what it might happen for today, and which scenario from the deep analysis yesterday. If you would like to see it in details, of course you can go back to it. So we had those four scenarios. One is a bullish scenario, which we want to see, of course, continuation toward the upside, while we have other three bearish scenario in case we don't take the 99,000 as we said yesterday and before yesterday, and we did not really take it yet. We did not invalidate a contracting diagonal, which is the only barrier between the bullish scenario and the bearish scenario. So not taking the 99,000 is of course still a much more bearish possibility. The first one is to continue a contracting diagonal towards the downside, considering that this is an A, B, and a C, and then start moving towards the upside once reaching at least the uncommon fib target at 1.38 fib level at 89,900. In case, of course, we reach this target, we have to see a signal of 5 waves towards the upside, 3 down, and then continuation towards the upside, breaking, of course, this level here as an entry and confirmation point. Now, of course, this can still be even if finished a contracting diagonal. As we have mentioned, we have also our short-term bullish scenario where we might have finished in the top here, and that will be possibly even considered as 1, 2, 3, 4, 5 in case you have finished contracting diagonal, can be a leading diagonal for an impulse toward the downside after a wave 2. After wave 2, you will see a very strong wave 3 towards the upside, and this is a scenario where the CME gap can be closed, where we have a large CME gap that it has to be closed sooner or later. Now, another scenario that we talked about it, that this might be a 5 waves toward the downside, and we have finished A, B, and C, or WXY here, and we're looking at 1, 2, and then 3, 4, 5 as well. Another impulse scenario where we are right now in a wave 3 towards the downside. So you would like to see directly move towards the downside, breaking, of course, is also FIB levels and reaching around the 70,000. 77,000 to close this gap. Your target for a wave 3 is 76,200. The last bearish scenario, which is a short-term bearish scenario, meaning that you're still in 1, 2, 1, 2, 1, 2, 3, 4, 5, but your wave 4 might be very deep in a zigzag shape where you might, of course, dive deeper and then start to move toward the upside again. And this is, of course, very optional because invalidation of this bull run is at the 73,400 almost, where the price action might interfere with your wave 1 or even this wave 1, because currently we are in the orange scenario where we are looking here at this that 1112, and currently we are in the orange scenario. So you need the price action to get interfering with this wave 1 here, which is at 66,500 actually, to of course invalidate an impulse. And by all means, that the correction is very free to range even at this range and start, of course, for a continuation towards the upside at any time it wants. And that because, of course, of the gap that we have already here as a wave 3. It is a very extended wave 3, also with the CME gap, that it should be closed. So it is a very normal if the price action move towards the downside like this and then continue towards the upside for, of course, the bull run for 1112s, where we still have a double 4545 to continue, right? So 4545, the expected price are 130k, of course, in that case. Now let's move to the 4-hour chart to see what happened yesterday, and this is exactly what I was talking about yesterday, that we might here have finished, of course, 1112s, because as a contracting diagonal, this wave 3 is longer than your wave 1, and which is not allowed, of course, in Elliott wave to be a leading diagonal, where you want to have, of course, even like another 1, 2, 1, 2, and then 3, 4, 5. Your wave 4 has, of course, interfered with your wave 1, which is also not allowed for an impulse. Therefore, it is very low possibility that we are moving towards the upside in 1 2 1 2 1 2 and then again 1 2 and then 3 4 5. So it is like a 4 1 2s here. The possibilities start to move towards the downside, of course, much more, of course, as moving toward the upside. Yeah, so basically, this is what were expecting yesterday. We said if we don't take the 99,000, which we were very close to it, but we did not touch it, and that because the 99,000 will invalid a contracting diagonal. By all means, on 99,000, this wave 4 will become longer than your wave 2, and by all means, it will invalidate, of course, this contracting diagonal, and that means it will transform this correction in W, X, and a Y, and then we start to move towards the upside in 4 1 2s. So the possibility, as we said, is higher, therefore, for the bearish scenario to get a lower prices. Our first target is in 90,000 for the 0.38 for a wave 4 in the orange scenario. And the next target, in case we break this, the next target, of course, is the 87,000, where we have the last support here before we move massively toward the downside in an impulse as a 1 2 3 4 and a 5. So if we stop here as this price action, that might, of course, unfold the zigzag scenario that we talked about it in the daily, and then start to move towards the upside. Again, now basically our first target is in 90,000. Once we get there, we're gonna reanalyze and see what are the potential to move towards the upside or for continuation for lower prices. Now let's start with the indicator, of course. Here analysis, we're gonna start with the volume. On the volume, as you can see, we have here for this price here, where we have like 1 2 1 2 1 2, we can see clearly that the volume is moving toward the downside. And when you see the volume moving toward the downside while the price is moving toward the upside, that means the price action has started to lose momentum. And when losing momentum, of course, you would like to see a lower prices start to unfold as we are looking at right now. So that was what the volume tells us exactly at this area on the 1 hour chart, and we are expecting, of course, lower prices. Now another indicator is the RSI, of course, the most famous one. Let me just adjust this. I like to see this more thicker. So for the RSI, we are looking here. We can see something nice, maybe as potential bullish a little bit, but it is not really strong. We have, of course, here a divergence for the bullish scenarios, where you would like, of course, to see higher prices. However, it doesn't mean that it cannot take even a lower price and then move towards the upside. By moving lower, this RSI, of course, will move lower, and the divergence will become even stronger. But don't forget that this move towards the upside might be a very shallow and then continue towards the downside after it, because this might be, of course, the formation of 1 2 3 4 and a 5. So this might play, of course, the wave 4 and then continuation towards the upside. We are only on the 1 hour chart here, so it's not really strong signal. Now let's see it on the 4 hour chart. As you can see on the 4 hour chart, if we take those two bottoms here, they are interrupted. So we don't have any other option rather than take this one. So as you can see on the 4 hour chart, there is no divergence, and that's why we see it only on the 1 hour chart, where your 1 hour chart, it might give us, of course, a very small wave towards the upside in case we have divergence. So it's not something very significant. We need, of course, the RSI to move towards the downside like this to be bullish, of course, but in that case we don't have it. So, of course, expected price on the 4 hour chart to move lower for the RSI as well. If we move to the daily here, on the daily, we can see that we don't have any divergence for bullish, but we have something bearish actually, when you have like the tops continues towards like a convergence from the tops here. as you can see. So this one should be taken from the last top here. So as you can see, the convergence for the bearish, and means that this is the right direction of the price action still, and we are still looking, of course, for lower prices even on the RSI. So bearish signal for the daily on the RSI more than bullish signals. So yeah, let's see also the KGT. As the KGT, of course, says we still have a sell signal from the top on the 15-minute chart here. Of course, this is the top. It says sell. That means doesn't mean it's not necessarily to be very bearish. It means also correction. So we are looking, of course, at this signal. No buy signal still in the back. We didn't get it yet in the front. And as you can see, for the bullish signals here, they are not a divergence as well with the price action, which of course tells us that this still might be, of course, a bearish, much more possibility, where we are looking as well on the signal of the bearish. As you can see from the tops here, we got a convergence with those bearish signal, and we saw lower prices. Now, of course, one signal has appeared without divergence. Now the price move up, but when you don't have divergence, means you will not take the high. And this is exactly what happened. And suddenly, of course, we saw the price here giving us the bearish signal again from the tops with a convergence between the tops and the price action and the CVD lines. And we are expecting, of course, a big move towards the downside actually to take the low. So this is what KGT, of course, tells us exactly here, that this low is gonna be taken, unless if we see, of course, another bullish signal here with, of course, it should be lower on the CVD, while the price action should not take the low if we see this. Therefore, of course, we have to start to consider a bullish move towards the upside. So, of course, at that time, it's gonna be tomorrow until we get this. For today, the price action is moving towards the downside. Now, let's see the MACD, what the MACD tells us. Let's move to the MACD. Here we go. So, on the MACD, nice on the daily, but let's start from the 1 hour chart. Yeah, on the 1 hour chart, of course, we are looking here at some red accumulation, of course, and it looks like very red. Maybe, of course, yes, this might break, or might, nobody knows, might, of course, even play as support and then move towards the upside. But basically, this doesn't look good, because as you can see, the bearish cross has opened here, right? And we see the price is opening towards the downside, as you can see. So because this is open, meaning that it might, of course, move towards the downside and start to create some selling volumes here, and of course we see lower prices. On the 4 hour chart, okay, yeah, this is a very even clearer, much clearer signal. A bearish cross on the 4 hour chart, finished selling volume just by going until the zero with a trend line. That means, of course, we might take the low already. So we might see, of course, a kind of like a selling volume getting higher, of course, here than the previous selling volume on the 4 hour chart. Don't forget that the buying volumes here also is reducing, is getting lower. Sorry, is getting lower, and then we are moving towards the downside. Now, on the daily chart, we already, we have already broken the zero, and that is also not really nice. Because the trend line is already under the zeros. Now we are very close to form a bullish cross, but this bullish cross is forming under the zero. So yeah, not sure how this is gonna react. It can break towards the upside, but I'm not sure if we have some weakness. It might still open a new curve towards the downside directly, and see, of course, lower prices. So yeah, that means, guys, we might have a bigger correction here, probably, but we're gonna see how this is gonna react. If we get the same candles green candles here like this as a very, very small amount of volume, this is not a good signal. Always when you get these type of small volumes and then continuation towards the upside, it might be, of course, something big might unfold, of course, for the next upcoming move. So possibly that we still see a third wave towards towards the downside here with the volume, and then of course bringing the price for lower. Don't forget that we might have a zigzag, we might have an impulse, or we might have simply a contracting diagonal, right? Finishing almost around here and then moving towards the upside. However, this move will need, of course, another volume, right? So this is the idea. On the weekly, we are looking at the weekly here. Yeah, we are already, yeah, it looks like not really nice. Because of course the volume is moving towards the downside. Now that is nothing tells us, of course, that the volume cannot get higher at any new week, but I think this can be possible, of course, for the weekly to get higher, but of course it depends on the lower time frame here what happens. Yeah, if the lower time frame can get higher, especially the 4-hour chart is very interesting. If the price on the MACD, of course, also show us strength, then therefore, yeah, I might reconsider. But basically right now it depends on the lower time frame, like the 4-hour chart. And yeah, if this move towards the downside, of course, therefore we have to wait for the low until we start to buy again for the bull run as continuation. The last indicator that I would like to see here is the Bollinger Bands. In the Bollinger Bands, let's see what do we have. Now on the 4-hour chart, so based on the 4-hour chart, okay, we are very close to the midline, right? We are very close to the midline. So if this midline want to play as a support, probably if it is broken, then we will move towards the downside. Now it has to stretch, of course, in case we are moving towards the downside. Now if we see some strengths here, this might, of course, give us a kind of like, okay, a signal for bullish scenario where we might play here with 4-1-2s, which is, to be honest, a little bit lower possibility again. Now for the daily, very interesting, of course, for the daily, it shows us that the price or the price here can break the middle still. And if we get to the lower band, we are very, very close to the 90,000, where you might finish this final leg of your contracting diagonal 1, 2, 3, 4, and a 5. And this is exactly what we would like to have here. Not really very deep and not really like something like suspicious, like 4-1-2s. We would like to see one more leg finishing as this contracting diagonal nicely, and then start to get a very clear signal. If we are moving towards the upside, you want to see 5 waves. If we're continuing towards the downside, you will see 3 waves rather than 5. And from there, we can know exactly what are the potentials between bullish and bearish scenario. Currently, we are still in a bearish horizon here that, of course, it might unfold at least until the 90,000, I would say. So yeah, today, of course, I'm gonna have some videos as well, educational videos about cryptocurrencies if you are interested. The difference between the bull runs of Bitcoin and the altcoins. So what is the difference and when we get them? And of course, we're gonna see some some analysis for the dominance of Bitcoin over the altcoins, which is a signal, of course, when the alt season can start. So of course, stay tuned, and I will be there, of course, for a new video for it. Thank you for watching. Thank you for your likes and comments. See you in the next one. Bye bye.